Hi guys, welcome to this Money Control live stream. I'm Nandita Khemka from our Mumbai studios. Of course, it is beginning to get a little chilly here in Mumbai in the mornings, and it's good to see that the bulls have also woken up from the slumber, given the fact that we've seen a 900-point rally over Friday and Monday, but yesterday it was a day of breather for the bulls. We saw the Nifty end with the negative buyers below that 24,200 mark. But today seems to be an okayish day because the kind of news flow that's coming out from global markets and the global landscape are or is looking pretty much positive, given the fact that Wall Street clocked a fresh high overnight. We have a ceasefire as well to digest, and crude prices have cooled off. So yes, quite a few positives, and of course also the fact that FIIs were net buyers yesterday. Remember, they had snapped a in fact they have snapped a 38 session sell streak day before yesterday, and yesterday as well. The buy figure of FIIs will provide some comfort to the bulls. However, the domestic investors were sellers yesterday, but the quantum of sell-off wasn't all that big, so nothing to really worry about. So yes, positive news flow to digest. Lots of stocks also in focus. The likes of M&M, Ola Electric, they have made some new launches. You have all the other stocks as well, like Prestige Estates, that will be in focus, given the fact that Morgan Stanley has downgraded the counter. So lots of stocks in focus. Also, watch out for NTPC Green listing at 10 a.m. It is expected to be a muted debut, but let's see how things really pan out. So lots to digest, and of course, I'm sure you will be having your stock-related queries ready for us as well. So keep them coming in on our live feed. We'll try and take them up with our experts on the show. But of course, before we move any further, as usual, let's take a look at the top stories at this hour. Wall Street closes higher with the S&P 500 and Dow hitting fresh record highs as Fed minutes point to further rate cuts, albeit at a gradual pace. Asian markets trade mixed, while the GIFT Nifty suggesting a mildly higher start for the Indian market. Israel and Hezbollah announce a ceasefire effective today after being approved by the Israeli cabinet. US President Joe Biden says the historic deal is designed to be a permanent cessation of hostilities. Crude prices dip with Brent trading around the $72 a barrel mark as Israel and Hezbollah agree to a ceasefire. However, gold prices remain steady. And NTPC's renewable energy arm, NTPC Green, will be listing on the exchanges today. The 10,000 crore rupee IPO was subscribed 2.4 times, backed by strong retail demand. And Mahindra deepens its electric vehicle bet, launches 2 new electric SUVs promising faster charging and higher mileage. Well, those were all the top stories at this hour, but looking at the cues for trade, yesterday, of course, we had a very good start and we were hoping to maintain the momentum that we had seen in the previous 2 sessions. However, the bulls kind of got tired at highs, at around 24,350 levels, and we erased, in fact, almost 200 points, from opening gains, and we ended even below that 24,200 mark. It was a flattish close, but, as I mentioned, 200 points shaved off from the day's high. The Nifty Bank Index also ended flat, but the market breadth was in favor of advances, given the fact that broader end of the markets, the mid and small cap indices managed to outperform the frontline indices. If you look at the Adani group of stocks, they were among the top laggards on the index, given the fact that ratings agencies like S&P, Moody's, Fitch, all of them have revised their outlook to negative on on the back of the bribery charges in the US. So yes, Adani group of stocks continues to be in focus. And if you look at the FNOQs, the options picture rather, the put call ratio fell to 1.04 from 1.11 in the previous session. And good thing is there are no stocks in the FNO ban today. Couple of or 3 counters that were in the FNO ban yesterday have exited the ban list. So no stocks in FNO ban. Aarti Industries, GNFC and Granules have all exited the FNO ban list. And as I was talking about the fund flow picture at the start of the show, FIIs have been net buyers for a second straight session. The buy figure from the FIIs were somewhere around 1100 crore rupees in the cash markets. DIIs were, however, sellers to the tune of 1900 crore rupees in the cash market. But on that note, let me bring on board our technical expert for today. Joining me is Rajesh Palviya of Axis Securities. Rajesh, great to have you on the show. 24,350, that was a swing high yesterday, in fact 351 or so. Would you expect the bulls to in fact make a dash at that level? If yes, would you call that level a crucial turning point in terms of calling a trend reversal after the recent bout of sell-off?
Good morning, Nandita. Definitely. So the way market has recovered in last couple of days, the broader market has improved quite well. Nifty is comfortably holding about 24,000 level. Since last two trading session, Nifty is holding about 20-day moving average. We believe yes, there is a possibility that Nifty may able to give breakout about 24,350-400 zone, and once that breakout happens, this rally can extend further. We are towards the expiry for this November series, and the way this October and November series played out, the most awaited correction is already done in the market, and Nifty has already corrected 10%. So I think most of the stocks where we have seen a stretch the kind of price action is now reversed, and it's now available at very attractive prices. We have witnessed a short covering in most of the large cap stocks. So we believe, yes, one should remain on the long side of trade till 24,000 is intact on the Nifty. For Bank Nifty, 51,800 is the important level. Till these two levels are intact, I think one should use any minor decline as a buying opportunity. We are focusing on 24,200 call option for upside target of 175 with the stop loss of 75. So I think to play this up move towards the expiry, this call option can give you a good trading opportunity. So I think 24,200 call option one can look to buy. And on the Nifty and Bank Nifty, we are holding our bullish view for near-term perspective.
All right, bullish view of with a with a near-term perspective, but I want to get in your thoughts on an HDFC Bank. It managed to clear that 1800 level day before yesterday. Since then it has been a little sideways. But what are the kind of levels you'll be watching out for in terms of resistance now that 1800 has been cleared?
So I think this is the one of the large cap banking stocks which is now trading near to its all-time high trajectory. And the way the HDFC Bank has moved up in last couple of weeks, we are holding our bullish view for the stock as though it's a slow mover, but the way long-term charts are placed, we believe that any move above 1800, 1820 may encourage further more buying action in this stock, and then possible really can extend towards 1880 to 1900 kind of zone on the near term perspective. But for the long term perspective, we are bullish, and we believe that this stock has potential to cross 2000 mark also, but it may take time. But for trading point of view also, one can hold on, or fresh long can be done in HDFC Bank with stop loss of 1750, upside target 1830 to 1840 for trading point of view.
Okay, that's the view on HDFC Bank. But let's talk about Siemens. It has reported its numbers. The fourth quarter numbers came out. Profits were above estimates. Even the margins were above expectations, but revenue was a slight miss rather. Would you be taking a bet? I think there's a report from Antique on this particular stock this morning, and they have recommended a buy here. What are your thoughts, and how is the stock looking?
So long-term structure for Siemens is on the bullish side only. Since last couple of months, stock is consolidating in very tight range, and the way Siemens is holding about 6,700 level, I think trend is likely to play out on the bullish side. We are holding our bullish view as we have witnessed a good recovery in most of the capital goods stocks in last couple of days. Siemens has also managed to cross 50-day, 20-day moving average in this recovery. So till stock is holding above 7,000 mark, I think there is a possibility that 7,500 to 7,600 would be the next target for Siemens. So I think those who have already bought can hold the position with stop loss of 7,000 for trading point of view.
What about Vedanta? This stock is in focus, right? It has signed, a memorandum of understanding with the Kingdom of Saudi, and it will be investing $2 billion in Saudi copper processing facilities. It will be setting up a greenfield smelter and refinery, and also be producing copper rods. If you look at the last 5 days, it has seen okayish traction. Last 1 month hasn't done all that well. Within the metal pack, would you look at a Vedanta or would you go with the others like Tata Steel?
So Vedanta is having very stable structure in terms of short to medium term perspective. Since last 4 5 months, the stock is very well holding about to its previous breakout trajectory of 435 440 zone, and since last 4 5 months, the stock managed to hold these important support area for long term chart. So I think till stock is holding above 430, I think one should hold their position even for the near term perspective. Also, we believe that once stock crosses above 460 mark, I think there is a possibility that stock may exhibit a good amount of rally towards 485 to 500 zone. Also, stock is now negotiating with its falling trend line on the weekly chart. So I think 455 460 is the immediate challenging level. I think. The way broader market has recovered, there is a possibility that Vedanta may attempt to view breakout above 460, and if it's happened, I think a rally can extend. So I think those who are in long side of trade can hold the position with stop loss of 430. It's a positional view for the stock.
Okay, a positional view on the stock Vedanta, but another stock that will be in focus will be Zaggle. It has entered into an agreement with Mastercard, and Mastercard will be recommending Zaggle's SaaS platform payment and card products to corporate customers and other ecosystem entities on a referral basis. I think it's a 7-year deal for domestic and international markets. Any thoughts on Zaggle if you've been tracking? The stock in the pre-open at least is showing a good gap up.
Definitely, stock is in sustained uptrend. Stock is almost trading near to its all-time high trajectory. The way stock has moved up in last week, we believe that any follow-up buying action above 475 can take this stock further higher to 520 to 530 mark also. So Zaggle is looking bullish. Any minor dip should be used as a buying opportunity. Those who are looking for positional kind of investment. So 435 is the key support area for this up move. I think yes, really can extend to 520 to 530. So hold the position in Zaggle.
Okay, that's about Zaggle. Just about a few seconds to go for the markets to open, but IT stocks have seen good traction yesterday, Rajesh, and off late, of course, IT has been on an upswing as well. But I want to get in your thoughts on an LTI Mindtree in particular. Nomura has a reduced call, target price of 5,140, whereas Morgan Stanley has an overweight call with the target price of 7,050. Which way would you swing?
Yeah, definitely. Whole IT stocks are looking promising at this moment. The LTI Mindtree, we are holding bullish view. 6,400 is the next target for the stock. Keep your stop loss around 6,150. Even Birla Soft is also our preferred choice at this juncture. We are projecting target of 620 for this stock. So I think IT can be looked at to buy for near term to short term perspective. There could be a possibility of further more upside we could see in most of the IT stocks.
All right, possibility of further upside in IT stocks, and with that we have the first ticks coming in. Markets have opened on a negative note this morning, although the GIFT Nifty was hinting at a positive start. It is a mildly lower start, although 24,160 is where we are at, a 30-point downtick on the Nifty as we speak. Sensex around 79,900 at this juncture. The mid-cap index also in line with the benchmarks, is trading with negative bias, and the bank Nifty as well. Just about holding on to that 52,100 mark as we speak. So all in all, a muted to negative start. It's the penultimate day of the monthly FNO expiry, just to remind our viewers. But in terms of other sectors, let's see what most of them are doing. Barring the auto pack, all the other sectors are trading in the red at this juncture. The auto pack is holding out, 0.5% gains there. But if you look at the other sectors, realty is down 0.5%, metals are down, pharma is extending losses, IT very flat at the current juncture, very difficult to gauge which way it would move. FMCG was among the top gainers yesterday. Today there is a 4/10% kind of a loss coming in on this index. Energy is down as well. Banks, as I mentioned, I want to see what the PSU bank index is doing. That index is also down by about 0.2%. So yes, it is a negative start. The bulls are trying to find their feet because yesterday, of course, it was a day of break for the bulls, and today as well they are struggling to find their feet after the recent 2-day up move. But in terms of individual movers, I want to see what stocks are doing well. M&M, 2 new launches, e-SUVs launched yesterday. The stock is cruising away today, 2.5% gain, top Nifty gainer. Coal India, there has been an initiation. Just want to see which brokerage has initiated coverage on Coal India. Morgan Stanley, it has initiated a call on the stock with an overweight rating. Target price is at 525. So this stock is the second top gainer on the index. Wipro, Tata Motors, Tech Mahindra. So some of these IT names are continuing to see gains, and the other movers are BPCL, Adani Enterprises in the green, NTPC as well ahead of NTPC Energy's listing, and BEL extends its winning streak into today as well. But what is not doing well is Cipla. That's the top Nifty gainer. 1.5% kind of a cut coming in there. Adani Ports continues to be in the red. Bharti Airtel, Apollo Hospital, some of the banking names like IndusInd Bank, and you also have SBI Life and Tata Consumer in the red. UltraTech Cement, it was a loser yesterday, today as well in the red. Looking at the open, just as I'm talking to you, we've just about managed to edge back into the green and now knocking at 24,200 once again, Rajesh. But tell us, what would you like to recommend in terms of stock picks for our viewers looking at the market open?
So I think, Nandita, as I mentioned, IT is the pack where one should focus, as outperformance is clearly there. So for trading point of view, IT stocks are looking promising. From IT pack, as I mentioned, Birlasoft, that stock we are focusing, and I think a good buying traction in Birlasoft after this opening. 620 to 640 is our next target for the stock. So here one can buy as a positional perspective with stop loss of 578. Another stock from IT, that is HCL Tech. That stock is also trading almost near to its all-time high trajectory. I think here also we could see good traction towards expiry. 1960 to 1970 is the next target for HCL Tech with stop loss of 1875. And the third stock that we like is BEL. Here also stock has shown a good recovery in last couple of days. And the way stock is almost now trading near to 300 mark, I think if any follow-up buying action above 300 level can take this stock further higher to 310 to 315. So BEL is also another stock where one can deploy some long trade with stop loss of 290.
Okay, BEL, remember JP Morgan also initiated coverage on some of these defense names yesterday. So BEL continues its winning streak into today as well. But let's talk about some of the top movers in today's session, in particular M&M. That's the top Nifty gainer, somewhere around 3,055 at the current juncture. And this stock has done well vis-a-vis Maruti. If you look at the last 1 month and 3 months, your thoughts on where it is headed, and even Coal India for that matter. Of course, there's a brokerage initiation with an overweight call and target price of 525. Of course, they have mentioned that valuations are looking attractive now. But in terms of technicals, how would Coal India be poised on the charts?
So first on M&M, so from Autopack, I think M&M is the stock where stable structure is there across all time frame. Though there was some correction in near term, but the recovery is very significant in this stock. Looking at the near term, short term structure, we believe that till a stock is holding above 2980 level, I think this stock may exhibit further more upside towards 3150 to 3200. So I think M&M one can hold on long position, even fresh long can be deployed with stop loss of 2980. Coal India, it's a oversold stock on the near term, short term structure. Some recovery is taking place in this stock. I think in this recovery, if stock crosses above 425, I think there could be a possibility of short covering action in this stock, and then the stock can extend its gain towards 435 to 440 zone also. At this juncture, our view is bullish for Coal India for to play this recovery. Keep your stop loss around 408 to buy Coal India also for upside target of 435.
Okay, that's the view, and those are the levels to watch out for both on M&M and Coal India. But let's take up some viewer queries then this morning. I want to take up the first one from Srivardhan Gupta. He wants your views on Goldiam International for short term and the medium term. The stock has seen a very good run in the last 6 months. 80% surge, on a YTD basis also it's up 80%. But off late it has been, in a corrective phase. 1 month we've seen 13% being shaved off. How should one navigate this stock for the short to medium term? Is it a good time to buy more? Or, if somebody is making good profits, is it time to, perhaps sell partly? How would you approach this?
So I think stock has corrected in line with the market correction, the way mid cap, small cap stocks have corrected in last couple of months. I think the same behavior is already there in the Goldiam also. Though long-term structure is bullish on the monthly, yearly chart, stock is holding the strength. I think yes, this correction can be used as a buying opportunity. But here I would advise to keep a strict stop loss of 285 if you are deploying any long trade in this stock. On the higher side, 330, 335 are the immediate supply zone. If it crosses those levels, then I think really can extend to 365 to 370 zone also. But those who are buying at this moment, 285 should be your stop loss.
Okay, a stop loss of 285 for those who are buying this stock. Hope this answers your query. The next query is coming in from Kishore, and he wants your thoughts on a Shakti pump and a KSB pump as well, whether one can invest at current price. After the kind of rally stocks like Shakti pump have seen in the last 6 months, would you advise a buy at these levels? In fact, Shakti pump itself hit a fresh 52-week high today.
Yeah. So there is no corrective move in Shakti pump since last couple of a week. The way stock is moving in higher top, higher bottom formation, I think those who have high risk appetite can chase this really. But any volatility in market or if you get any dip in this stock towards 810 to 800 kind of level is buying opportunity, as overall structure is bullish, and I think till stock is holding above 800, trend is likely to remain on the bullish side for the trade stock, and maybe stock can extend its gain towards 950 to 1000 kind of level also. So minor dip should be used as a buying opportunity. 780 should be your stop loss to buy this stock in decline. KSB pump is also holding the strength on long-term chart, but in near-term, short-term perspective, some correction is already done in this stock. Some recovery is happening in this stock. Stock has formed a base at around 800 kind of level. So I think if you want to buy a KSB, 800 should be your stop loss. On the higher side, 875 is the immediate supply zone. If it crosses those levels, then 950 could be the next target. So I think here also one can go long with stop loss of 800.
Okay, that's the view on Shakti pumps as well as KSB pumps. Hope that answers your query. But let's see which are the other queries that are coming in. Pidilite, there's a query from Alex on this particular stock. Of course, we know that Trump has threatened tariffs on Mexico and Canada, and an additional 10% tariff on China as well. He wants to know how this will impact Pidilite, in terms of stock movement. Let me just pull up the charts of Pidilite and see how it's been doing. But do you think this will provide a leg up? And the stock has actually been under some bit of selling pressure, in the last 1 month or so. Even the 6-month chart is, showing negative returns. But do you see some kind of reversal on the charts now? Has it seen the sell-off that it should have seen by now?
Nandita, weakness is still there in the stock, though some recovery has been done in this stock in last couple of days, but still looking at the near-term, short-term structure, stock is sustaining below 220-day, 50-day moving average, and the way weekly, monthly charts are placed, I think stock will take time to recover. 3070 is the key supply zone for the stock. So until these levels are not taken out by the stock, I think stock may struggle for any pullback, significant pullback. So those who have already bought at lower level should follow the stop loss of 2920. If that stop loss breach, I think one should exit because still trend is on the negative side for the PD light.
Okay, the trend remains negative for a PD light at the current juncture, but there's a query coming in on BHEL from Vedant. Now, PSU stocks have seen a fair bit of correction. Even BHEL, for that matter, it has corrected quite a bit from its 52-week highs of 335 or so. But of course, post the Maharashtra poll victory, we've seen PSU stocks coming back in the limelight. Of course, you mentioned BEL as a stock pick as well. But what about a BHEL? In the last 5 sessions, it has, in fact, I think since Friday, it must have seen that up move. It has, seen a 10% bump up. Good time to buy?
I think yes, here one can deploy some long trade. Stock is holding about 20-day moving average since last couple of days. The way stock has formed a bottom at around 220 kind of level, I think it's a significant buying action from those levels. Maybe stock may face some supply around 255 to 60 zone, but I think looking at the long-term structure, we believe that till stock is now holding about 235, there is a possibility that stock may attempt to give breakout about 255 to 260. So for trading point of view, 235 should be your stop loss. 255 to 260 would be the target.
Okay, that's the view then on a BHEL. But Cipla is among the top laggards on the index. 1478 is where it's at. How would you be approaching this stock from the pharma space?
So I think it's a mixed kind of behavior in pharma space. Cipla is one of the stock where we are witnessing some pressure or negativity in the stock for near term to short term perspective. Stock is now trading near to its very critical support area of 1450. If any breakdowns happen below 1450, the furthermore supply pressure we could see in the stock prices, and then 1420 to 1400 would be the next target for Cipla on the downside. So I think I would avoid at this juncture to buy this stock till stock not able to cross above 1520, 1530 mark. I think sell on rise is the strategy at this juncture for Cipla. Below 1450, one can initiate further more short position for downside target of 1400.
Okay, that's a view on Cipla within the pharma pack, among the top laggards on the Nifty at the current juncture. But with that, Rajesh, we've come to the end of the query segment, and of course, would like to thank you for taking out time as usual and joining in and sharing your thoughts with us. Always a pleasure, and I look forward to connecting with you again sometime soon.
Sure, thank you.
Well, on that note, let's take a look at where the markets are at the current juncture. The feeble attempt at a comeback, has fizzled out. We did try to, edge back into the green, but, we are back to where we started the day. 24,160 is where we are at. It is red across the screen, but nothing to really worry about, because it's not like a big sell-off or something. But yes, the bulls are trying to find their feet at the current juncture. But on that note, let me bring on board our next guest for today. Joining me is Nirav Karkera, who's the head of research at Fisdom. Nirav, always a pleasure chatting with you, but what are you making of the kind of up move we saw in the market over the last, not last 2 sessions, over Friday and Monday? Of course, yesterday was a day of breather. Today as well, the bulls are just about struggling to find their feet. But there are a couple of good news to digest as well, right? With FIIs or the intensity of sell-off from FIIs, kind of abating, and they have turned net buyers. Second straight session we saw FII buy figure Is it too early to call a trend reversal, or do you think these positives are starting to reflect in the market, and here on we could see up move, because we've seen a 10% correction from highs?
So, Nandita, always a thrill to be discussing such significant topics with you. So, while you have rightly pointed out, the markets have been rather bruised since quite some time now. It is just the past couple of days that we have seen sort of a breather or a relief rally, if I may call it so. It has happened on account of a couple of triggers. Of course, it is the landslide victory of the current reigning government in important state like Maharashtra. So that is one positive trigger that has paved way for further belief in the political landscape of India at large as well. So this is an important cog in the wheel right now. Apart from that, there are a few good things that have been happening and a few blessings in disguise that have been coming along our way. So of course, we cannot talk about the past couple of days without mentioning Trump's tariff stance on countries like China and Canada, right? So there seems to be a blessing in disguise for India, therein wherein any imposition of tariffs on China could probably pave some way for India's export scene. Of course, there continues to be a lingering risk because Trump in the past has also called India a tariff king and has not been very kind towards India in the past. However, it seems like over the past couple of years, the diplomatic ties have improved, paving way for a better trade relationship with India. So that has further bolstered the outlook. Apart from that, global macros seem to be ebbing and easing in favor, especially energy prices. The outlook on energy prices has been moving in our favor as the geopolitical crisis in the Middle East seems to be getting closer to a resolution or at least a ceasefire for now. So some of these reasons are moving in favor of Indian equities, and as you rightly pointed out, FPIs turned net buyers. Of course, we need to see such sustained buying for a couple of more sessions at least before we start calling it the beginning of the end, or else the last thing that we want is getting our hopes up high in a flash, in when something's actually a flash in the pan sort of buying by FPIs, right? We don't want to jump the gun there. However, right now the things are looking slightly upbeat, and in fact, with the year end coming closer, with FI action expected to ebb slightly and domestic action, buying action to continue to remain sustainable, it could support markets at higher levels. And of course, the largest macro is right around the corner, the upcoming union budget. So the pre-budget rally could also lend some legs to the current trajectory.
Okay, so before the pre-budget rally, I was hoping you would say that we will see a Santa rally as well. But I think, that we'll discover, as you mentioned, that, we need to see a couple of more sessions of green and strong green on the scene before actually calling it the, beginning of the end of the sell-off. But you mentioned about the whole tariff wars after Trump's victory in the US elections. Clearly, India is poised to benefit, but which are the sectors that one should look at to capitalize on this?
So some of the sectors that we are viewing positively is, that of course there are those who are indulging in exports, so manufacturing plus exports as a segment. We are looking at capital goods very closely. There are also smaller subsectors or other industries such as electronics within the manufacturing system that we are looking at favorably. In fact, a few pockets of defense is also starting to look really good at this point in time. Of course, IT should ideally look good, but a lot of it could be offset in terms of the impact on the INR. So probably IT looking good, but one needs to be really selective. So these are a bunch of sectors and segments that we are watching very closely.
Okay, but what are your thoughts on IT post the numbers, especially because earnings were in line, but there were no upgrades as such. But of course, after Trump's victory, we saw renewed optimism, on the back of hopes of strength in the BFS segment in the US, right, which could translate in higher deal TCVs for IT firms. So of course, you said be selective. So which end of the segment would you look at? Mid caps, large caps, companies that are more focused domestically. How would you play it?
So while the case is already being built for companies focused domestically, I feel in context of the new development, we would want to focus more on export-oriented companies. And like you rightly pointed out, the earnings have been largely flattish, and the indication hasn't been quite upbeat in the earnings season that has gone by. But of course, we know that the Trump administration is quite aggressive when it comes to their growth agenda, and banking financial services is at the center of the Trump administration's agenda, economic agenda per se. A lot of spillover demand can be expected to come to India, and the demand environment for companies catering to the specific BFS segment could witness some tailwinds. Of course, there are not a lot many companies that can be expected to witness such a tailwind, but most that are present in the large cap IT space and the slightly bigger mid cap IT segment. So I would very specifically try and look for opportunities in the large cap IT and slightly bigger mid cap IT names. I would try avoiding going further down the pyramid at this point in time. If there is a case to go further down the pyramid in hunts of favorable valuations, it must definitely focus on companies that are more domestic oriented than export oriented.
All right, got your point. But one pocket that's back in the limelight after the Maharashtra polls is the entire PSU lot, right? At one point in time, they had become the darlings of the market. Then they saw a sizable correction. But now, once again, they are back with the bang after 30 to 40% kind of correction from their highs. Of course, we've had a few reports on the defense side as well, where, brokerages have, kind of initiated coverage with overweight rating, the likes of BEL, HAL, and the likes. How are you viewing the entire defense pack now? Is it the right time to enter after the correction? Has the entry point or is the entry point looking more attractive? Should one play this space?
So, one good thing and one bad thing about the PSU slash very specifically defense pack is the good thing is that valuations have corrected to slightly more palatable levels. That's the good thing. The bad thing is that nothing has changed in terms of earnings being recorded as well. Right. So it's going to be a mixed bag. I feel the right way to look at the defense pack is to specifically not look at it as a pack, but look at it very independently and individually as probably from a bottom up perspective, because viewing the entire pack under a single lens or a single umbrella could lead to faulty decisions, because in the past sell off we have clearly seen polarization in terms of not all stocks being battered as equally badly, right? There are a few that really manage to hold up value, and the reason for that has been the strong fundamentals, their ability to service the projects that they have been taking on the book. So of course one needs to be very selective at a meta level. Of course there are a lot many tailwinds working in favor of the defense pack, like we mentioned at the start of the call. The victory in the Maharashtra elections is expected to give the current national government a lot more confidence in terms of being aggressive with their budget and capital expenditure plans, and within those plans defense forms to be a very core component of it. So that is one thing working in favor. Another thing in favor, we spoke about the upcoming union budget. So one thing leading to another, the case seems to be pretty bright for defense as a sector, as a segment. However, while considering the exuberance that we recently witnessed a couple of quarters back in terms of valuations, the current situation seems to be much less frothy, and will offer an opportunity for investors to handpick, defense stocks that could benefit from the upcoming union budget allocations as well. So one can be selective, bottom up perspective, and the larger trigger event is the upcoming budget.
Got your point, Nirav. Want to get in your thoughts on the auto pack as well. Today M&M is a buzz, right? They have launched 2 new EVs. but for M&M, some are of the view that EV offtake has been slower than initially expected. Maruti, of course, was a little late to the party, and now these guys have Hyundai as well to contend with as a listed player. Your thoughts on which of these are poised, are the best poised rather in terms of EV plans as well as valuations?
Correct. So, we'll get one thing out there. So, of course, Maruti has been is called to be very late to the EV party, but I feel that the entire EV party is running delayed. The party has not quite started as yet. It is just a bunch of guys assembling at the venue right now. It's the pre-party that's happening, and of course, with Mahindra's recent launches, it does mark its commitment into its EV foray, and it if nothing, it is a clear signal that Mahindra is willing to put its money where its mouth is, and it is very intent on developing its EV segment, of course. But the entire space, be it Hyundai, be it Mahindra, or the reigning leaders, that is Tata, in the EV segment, they are facing a lot of crunch in their EV sales number because of a much larger problem, not attributable directly to the auto industry, but to the ancillary industry, that is the power charging infrastructure that needs to be built, and the consumer mindset that has not been changed as yet. And with inadequate SOPs, it doesn't seem to be changing in a hurry. There has been very little work done in terms of offering subsidies to coax higher demand. In fact, if you look at the latest festive season sales, the EV sales have been largely lackluster. In fact, there has also been a very steep discounting model that is coming into play for large EV players as well. So Tata, for instance, has been offering really steep discounts to move inventory, but that seems to be getting no place ahead. So EV continues to remain a tricky patch, a slippery slope for all players equally, I would say. Probably this is one of those times where being late to the party has not really left Maruti outside of the action. On parallelly, in fact, if you see the new lineup of Maruti is looking really promising with the new models for the first time gaining a 5-star NCAP safety rating. So they have been focusing elsewhere, and that seems to be clearly helping them out. So that's one. The outlook for Hyundai remains really tricky as the competitive intensity and the demand environment bears as heavy as it is on bearing on the competitors like Tata Motors as well. So, at this point in time, Maruti seems slightly better positioned. Mahindra in the EV game might, if the EV segment picks off, the good thing is that Mahindra will have adequate time to catch up with the current leader in the EV space, that's Tata.
All right, so best dressed right now after Tata would be Maruti for the party, for the EV party.
Yes, absolutely. Or Mahindra rather. After Tata, it
Got
would
it,
be
got it.
Mahindra, but Maruti is going to be fashionably late.
Right, fashionably late. Got your point. But talking about sticking with consumption, how worried would you be of the urban consumption slowdown that numbers of FMCG players have thrown out? Is it and is it a trend that is here to stay, or is it just a one-quarter phenomenon? What's your take on that?
So the consumption in the urban segment seems to be ebbing. I feel it is not as much as a slowdown, as much as it is a decline in the pace of growth. So I'm not expecting any degrowth to happen or just flattish growth. I just expect it to grow at a much slower pace. This is also on the back of the fact that consumerism has been really on the rise and at peaks for the past several quarters now. So it also comes on the back of higher bases, right, which could lend an image of a much more deeper slowdown than what it actually is. I feel, urban consumption will, plateau a bit before it starts picking up. There are very limited fresh set of triggers that should spur consumption in the urban segment. The good news is that most of these triggers are moving into play for the rural segment. So the outlook for the FMCG companies remain slightly intact because of the rural side of demand, but urban demand can continue to hit a plateau and largely be range bound, at least for the foreseeable couple of quarters. So I do not think it is just a single quarter phenomenon. There is good reason to believe it could extend for the next couple of quarters, at least one or two, if not more than that.
All right, and if we're talking about consumption, we cannot not talk about quick commerce. All the action seems to be in that space, right? Heating up. Swiggy has made its debut. Zepto just around the corner. Amazon also throwing its hat in the ring. It's a hot space, the quick commerce space. Your thoughts? Which player has the edge here?
So the quick commerce space is turning out to be a very, very interesting playground right now. There is a good reason to believe that the current players will have a first mover advantage over the residual. Of course, the newer players are coming in with much larger balance sheets, so it is much easier to displace. But hey, we are living in an age where capital is no constraint, right? With the recent fundraising by Zepto and Swiggy's and Zomato's ability to hit the public markets and be accepted so wholeheartedly, we believe, of course, capital won't be largely a differentiator in this game. Last mile connectivity, dark store networks, and density of such dark store networks is expected to be a game changer. I feel a few things, that will determine the winner of this game is, who has penetrated how far and how dense is the penetration. So, across the width as well as the depth of the dark store and logistical last mile connectivity network will define the winner. Of course, so far Blinkit is the largest player, and Blinkit, along with Zomato backing it fantastically well, seems to be on a continuous trend of rising. So Blinkit has everything going in its favor. Zepto is closing in very, very, very quickly, considering how Zepto is a very focused quick commerce player, and even at a group level, all resources are focused towards quick commerce alone. And its foray into white label products, as especially on the fresh food items like the Zepto Cafe, could be a very good lever for its growth going further. Swiggy Instamart is trailing closely behind, but there is quite some gap between the leader and Swiggy Instamart. Swiggy still continues to be acing the game in the food delivery segment, but there is good reason to believe that it will start directing some focus towards its quick commerce business as the space continues to heat up. So these three players are expected to do very well. In fact, one shortcoming of these three players is its lack of presence in cities beyond the top tier metro and tier one cities. So there is a strong reason to believe players who have a logistical network beyond that will have a right to win a larger market share, because consumption there also is yet to really pick up, and it's blue ocean for now. So that's where the Amazon and the Flipkarts of the world seem to be having an edge. In fact, there are three key players that are now moving into the quick commerce segment at a very fast pace, and who have the ability to service beyond top cities, that is Big Basket, Amazon, and Flipkart Minutes, right? So it would be an interesting game to see. So while on one side we have the champions, the first movers, on the other side we have challengers with heavy logistical networks and really sturdy balance sheets. We'll have to watch this closely, but it's going to be an interesting game for everyone. In fact, the consumers are going to win. No matter who wins this race, the consumers are going to win, at least for the next couple of years.
Well, consumer is the king and consumer wins here. So yes, nobody is complaining. With that, Nirav, very interesting conversation as always, and I would love to, I would have loved to have a longer conversation with you, but let's save it for another time. Thanks a lot for taking out time and joining in this morning. Always a pleasure.
Thank you, Nandita. Likewise.
Thank you. Well, with that, we've come to the end of this edition of Opening Bell. Just want to remind our viewers, 10 minutes to go for the listing of NTPC Green. It is likely to be a muted debut, but it saw good demand from retail investors, 3.5%, not 3.5 times, the shares on offer. That's the kind of subscription it saw from the retail investors. But as we speak, The Nifty has managed to edge back into the green. We are above that 24,200 mark at the current juncture, and the mid-cap index has also managed to enter the positive zone. But with that, completely timed out. Thanks a lot for tuning in. Have a great day, and of course, come back and join us at 3:30 p.m. on Closing Bell. Thank you.